Welcome on board Dikshit Mittal as well and find out what he's making of the market right now. Dikshit, hi, afternoon. Great to have you on the show. Winding down on the year, you think the market will go further quiet as volumes begin to dry up?
Yeah, so market has been consolidating in a range for the last 15 to 18 months. And I think till the time any positive trigger comes in, whether in the form of earning growth acceleration or some kind of trade deal, or even if rupee also stabilizes, I think one of these three triggers, I think market is waiting up for. And we are hopeful that maybe by the start of next year, one of these three things should pan out and markets can be more optimistic going forward for the next 1 year.
In that optimism, then, Dikshit, what do you think sectorally could do well? And I mean, for starters, does one need to make that dissection of large caps versus mid and small caps? Because mid and small caps haven't quite participated in the last lap of the Nifty rally.
Yeah, so basically, last year, there were supernormal returns in that pocket of the market, mid cap and small cap from the large caps by a wide margin. But now, after this recent underperformance of last 1 year, long-term returns of small cap index is at par with the NSE 500. So I think most of the froth or you can say valuation concerns have been taken care of after this last 1.5 year kind of underperformance. And from here, I think market will be more stock specific, sector specific, and the companies which are delivering good numbers, which are having good outlook. So I think those kind of companies can start performing well, maybe from the start of the next year. And from here, I think one should be taking a stock specific or sector specific call rather than taking a blanket call on mid cap versus small cap or large caps. So valuation wise, I think we are more comfortable in that space, especially into the small cap. And from here, I think relative performance can start to turn around going into the next year.
But Dikshit, hi, this is Harsh here. That will mean that the small caps need to show some significant growth on the earnings front, because when you're looking at small cap valuations relative to their 5-year averages, they're still elevated, right?
Yeah. So one is to look the valuations in the context of expected earning growth. So as of now, what we are seeing is that mid cap and small cap as a basket has a better earning growth visibility as compared to the large caps. I think that is getting factored into the valuations also. And historically also, we have seen that in a growth market like India, small caps typically trade at a premium to the large caps because of the growth. And also small cap index is a pretty wide index covering around 250 companies. So some of the companies may be loss making also, so that pulls up the reported P multiples of the index. So one has to keep stock specific scenarios in that mind. But overall, I don't think valuations are too much out of whack if you compare to the growth expectations in that segment.
And Dikshit, if I were to request you to maybe pinpoint a couple of sectors that really interest you at this point within that small cap basket, what would those be?
Yes. In terms of sectors, we are positive on NBFCs, looking at the way interest rates have gone down. So I think NBFCs, particularly who are asset financiers, I think they will benefit in terms of better margins as well as better growth outlook also as the interest rates go down. So NBFCs as a basket, we are positive. Secondly, incrementally in the last 2 quarters, we have turned positive on the consumer discretionary side because of the kind of efforts that the government and central banker is taking to revive the consumption in the country. I think that will somehow start reflecting into the earnings, hopefully from Q3 onwards. And finally, we are positive on the private capex side. So these are the three sectors which we believe can do well going into the next year.
Dikshit, curious to know what's the view on IT? What started off as a bottom-up story, do you think can have some earnings visibility too?
Yeah, so IT one is to be quite stock and you can say pocket specific, because we don't expect broad-based growth to come back anytime soon into the IT space. But there are pockets, for example, engineering R&D companies or the companies who are more focused on the BFSI kind of space or manufacturing space. I think these 3-4 pockets within the IT space have relatively good earning visibility, and I think there I think one should focus on. But on a broad level, one has to wait because yesterday's Accenture results also indicated that on a broad level, growth, I think visibility is still limited as of now, going into next 1 to 2 quarters. But there are pockets, as I mentioned, R&D space, BFSI space. I think there one can make good money into the next year.
And Dikshit, I can't help but ask you, Shriram Finance in particular, it's a marquee deal, and I won't ask you for a view or an opinion on the stock in particular, but just talk to us. Foreign interest within NBFCs and Shriram in particular is extremely large at this point. You believe that there is a re-rating story even within the larger NBFC basket? Is that something that you believe could play out?
Yeah, most of the NBFCs are trading at, I think, good valuations, 2.5 times price to book. The good thing is, as the dilution happens at the higher price to book multiple, so book value goes up and your reported price to book comes down. So I think that makes the stock more lucrative from the valuations perspective, and also incremental money raise gives more ammunition for the growth also. So I think if the company is trading at good, more 2.5 times book value, and they raise money at that point in time, I think it helps the overall minority shareholder also and the company also.
In fact, when I was just doing the rough math, at around 2.1 lakh crore, which is the post-money market capitalization today of the company, and when you're looking at the price to book, it'll be roughly 1.6 times FY27. So that way it's looking interesting, because you've got 10,000 crore of profit after tax in FY26, and thereafter extrapolating for just a 15% EPS growth in FY27. Not EPS, I beg your pardon, profit growth. That will likely mean a 1.3 lakh crore size in terms of book value on a 2.1 lakh crore base. So around 1.6 times is what the price to book will fall to from just a month ago, where it was trading at 2.1 times 1 year forward. It's now fallen to 1.6 as a result of all the dilution, plus on top of it, the dilution at a book accretive valuation, but on top of it, all the profitability that one would pencil in, which will likely come through. So maybe this is how it plays out.
And, I'm just wondering as to how does it stack up now in this, MUFG plus Shriram combined vis-a-vis its other peers as well?
Yeah, because your cost of funds likely goes down as well, and that adds likely a couple of bips at least, or a few bips at least to the cost of funds advantage that Shriram has. The sector as a whole is doing fairly well for itself. You've got good growth in CV likely to come through. So you've got all of that to play out. Dikshit, how would you play the CV cycle? Are you bullish with regard to CVs, and how would you play it? Would you play it through some of the lenders?
So we have turned bullish on the CV cycle, especially next 2 quarters. I think this sector has good outlook, and we are playing this sector through OEMs as well, but more importantly through the lenders. So lenders into the NBFC space. I think we have good visibility at least for the next 2 quarters into this space.
Right. Okay, Dikshit, we'll leave it at that. Thank you so much for joining in today with your insight in the markets. Good to be speaking with you. Well, at the day's highs, holding up almost